If an airplane crashed a dozen times after taking off, it would be clear that the aircraft requires a fundamental redesign. Pakistan's economy resembles that airplane, having crashed 23 times in the last 75 years, each time necessitating a bailout from the International Monetary Fund, IMF. This wasn't always the case. In the 1980s, Pakistan was wealthier than India, China, and Bangladesh in per capita terms. Today, however, Pakistan is the poorest among them. Its most recent GDP growth estimate was a mere 2%, barely enough to keep pace with population growth. Currently, Pakistan faces an economic crisis fueled by high global oil prices, rising agricultural imports, and economic mismanagement. Year-on-year inflation hit a record 36.5% in April 2023, marking the highest increase in nearly 60 years. Pakistan is once again seeking an IMF bailout, underscoring its dependency on the IMF and vice versa. The symptoms of each bailout are strikingly similar. Pakistan runs out of dollars, seeks a bailout from the IMF, which provides financial assistance on the condition of privatizing state-owned enterprises, implementing austerity measures, and broadening the tax base. However, these measures fail to address the primary issue: the unproductive elite and a broken decision-making process. Consequently, Pakistan often finds itself seeking another bailout soon after the previous one ends. In this video, we will analyze the deep-rooted structural flaws that are gradually leading to Pakistan's downfall. Pakistan holds the record for the most IMF bailout packages, with 23 to date. The federal government has been effectively bankrupt for a long time. Last year, the interest payments on the government's debt and pension payments to retired employees exceeded the federal government's net revenue. The entire government machinery runs on borrowed money, not in Pakistani rupees, but in foreign currencies. Pakistan faces $25 billion in external debt payments in the fiscal year starting in July, about 3 times its foreign exchange reserves. For most of its history, Pakistan has allocated the majority of tax revenues to debt servicing, defense, and civil administration. Additionally, Pakistan has to import both food and fuel. After paying for debt, defense, administration, and imports, there is little left for large-scale asset creation, such as dams, power plants, or even education and public health. Pakistan has one of the lowest tax-to-GDP ratios at just 10%, with less than 1% of the population paying income tax. The agricultural income, real estate, and retail sectors are hardly taxed for political reasons, exacerbating the revenue shortfall. As a result, Pakistan often borrows more money at higher interest rates to run the country for another year. On average, every 4 years, Pakistan faces a severe foreign exchange shortage and seeks an IMF bailout. The IMF typically advises increasing tax revenues, tightening monetary policy, and maintaining a fiscally disciplined budget. But these measures do not address the root cause: Pakistan's lack of productivity. Every economy has an elite class at its apex. The more productive and entrepreneurial the elite, the more dynamic and robust the economy. Pakistan's elite, however, earn from unproductive enterprises such as land, housing schemes, and sugar, unlike India's elite, who head vast corporate industrial empires, or America's elite, who innovate in new economic fields like space travel. The richest Pakistanis either built their empires overseas or amassed wealth through crony capitalism and corruption. Even industrialists on Pakistan's rich list often thrive by cornering protected domestic markets rather than exporting or innovating. A recent UN development report highlighted that yearly economic privileges for Pakistan's elite, including feudal landlords, the political class, and the military, total $17.4 billion, or roughly 6% of the economy. These privileges are nearly impossible to curtail because most political parties draw candidates from these elite groups. Before we continue further, tell us, are you enjoying the video? If yes, please like and share the video and subscribe to our channel for more videos about BRICS development, power, and influence on the world. Let's continue now. The elite manipulate the market in their favor through unfair business practices, tax evasion, and preferential access to power. This rent-seeking behavior has given Pakistan one of the lowest investment rates in the world, and severely harmed the economy. The auto industry exemplifies this problem. Despite import substitution policies, Pakistan ranks 125th in the world for automotive exports, and the industry provides high prices and limited alternatives due to lack of competition. The real estate industry is another example of unproductive investment. Instead of investing in technology, innovation, and export-based sectors, businessmen buy urban land for housing societies, which are hardly taxed. This under-taxation incentivizes investments in property over more productive enterprises. For instance, Punjab province, with over 100 million people, collects less urban property tax than Chennai, India, with about 10 million people. This unproductive elite and the property investing middle class burden the exchequer. High levels of consumption result in importing luxury items, leading to soaring import bills. This year alone, $8 billion was spent on non-essential imports. While the world's business elite innovate, Pakistan's billionaires focus on real estate, slowly killing the economy. Why doesn't Pakistan tax unproductive sectors and use the revenue for productive enterprises? The answer lies in its broken political system. Political parties lack professionalism, long-term plans, and representation from the middle class. The National Assembly comprises feudal landlords, political dynasties, and business elites who resist creating a competitive economy. The military's involvement in politics, either through direct rule or behind-the-scenes influence, means politicians don't need to develop manifestos or deliver public goods. Instead, the military often replaces one set of corrupt politicians with another to maintain its power base. No prime minister has completed a term, with Nawaz Sharif, Pervez Musharraf, Imran Khan, and others being removed or installed by the military. Political instability deters foreign direct investment, and the system does not punish incompetent politicians. The military's involvement extends to business, creating a corporate empire with significant revenues, including top companies on the Karachi Stock Exchange and the leading real estate developer, the Defense Housing Authority. The military's interests in business and politics prevent the implementation of policies that would benefit the broader economy. Agricultural policy also benefits the elite, despite Pakistan being a net food importer with low agricultural productivity. For instance, sugarcane, a water-intensive crop, is grown extensively because sugar mill owners in the National Assembly profit from the protected sugar market. The ruling elite, benefiting from the unproductive economy, have no incentive to change the system. You may wonder how Pakistan has managed to survive this long and narrowly avoided economic collapse multiple times. This is not due to structural changes or policy initiatives, but because Pakistan has repeatedly monetized its geostrategic location. During the 1980s to 1990s, the Soviet invasion of Afghanistan allowed Pakistan to earn billions of dollars in US aid to fight off the Soviets. Once the Soviets withdrew, the US stopped giving aid, and Pakistan's economy began to crumble again. By 2001, on the brink of collapse, the US invaded Afghanistan and began providing billions in aid again. More recently, China has been providing billions in loans to try to strengthen Pakistan as a check against India. Additionally, millions of overseas Pakistanis in the Gulf region and the West send billions of dollars in remittances, keeping the economy afloat. However, hoping for a bailout or miracle is not an economic strategy, and eventually Pakistan will have to take steps towards building a more productive and inclusive economy. The entire system is skewed to favor the elite, and the decision-making process remains flawed. As a result, Pakistan is trapped in a vicious cycle of borrowing and bailing out, without addressing the core issues. The country's leadership needs to undertake comprehensive reforms to break free from this cycle, focusing on productivity, innovation, and sustainable economic practices. Only then can Pakistan hope to achieve long-term economic stability and growth. What do you think are the most pressing reforms Pakistan needs to address its economic challenges? How do you believe the involvement of the military in Pakistan's economy impacts the country's long-term development? In your opinion, what role should the international community play in helping Pakistan stabilize its economy? What lessons can other countries learn from Pakistan's repeated economic crises and dependency on bailouts? Let us know your opinions in the comment section below. Do you want to watch more videos like this one? If yes, please like and share the video and subscribe to get exclusive videos about how phenomenally BRICS is developing and growing its influence over the world. Thanks for watching, and until the next video, stay tuned.